Hello and welcome to the Growing Green podcast. Your host, Jeremiah Jennings, is the owner of Growing Green Landscapes in Birmingham, Alabama, and has a passion for growing the entrepreneurship community for those who are young in business. Being a business owner isn't easy, especially in the early years, and that's why in this show we dive into a wide range of topics covering all the challenges small business owners deal with. Even if your company is generating $1 million or more, the stories from our great guest and Jeremiah's own firsthand experiences will propel your business forward. And now, here's your host, Jeremiah Jennings.
What's going on, everybody? Thank you so much for tuning in to episode today here on the Growing Green podcast. This is your host, Jeremiah Jennings, and I'm super excited to come to you today from Scottsdale, Arizona, for another fresh new episode for you here on the Growing Green podcast. There's Mr. Kevin himself walking in with a wealthy landscaper. Could be people walking through. You probably hear some background noise. We are at the Revenue Intensive in, like I said, in Scottsdale, and it is, what are we here? End of January, right?
Yeah.
I am blessed and honored to have Brady Crabtree with me today. Brady, how you doing, buddy?
Doing well. How are you?
Good. I'm excited to be here, excited to have you, excited to get to know a little more about you. I seen your name, just circulating through LeanScaper and becoming an advisor and things. So, want to hear more on that front. It's very time. I think it's a very time. What would the word be? It's a good time, essentially.
Yeah.
It's a good time to be doing this show because people going into the new year figuring out numbers, right?
Absolutely.
Trying to get numbers figured out and straightened out. So, I would say, to our audience, what I would say that I know about you is you are a trusted financial strategist, right? Like you're going to come in and help people learn numbers, teach numbers from accounting. You were in a CFO role for a while, right?
Correct.
So I want you to take it over, man. I want you to kind of share your journey to get here. We spoke a little bit before we record, but share as much or as little of that as you want, how you got into the landscape industry, the green industry here. And then we'll dive into kind of your role here at LeanScaper and how we can help guys grow their companies with better numbers here in 2026 and beyond.
Sounds good. Yeah. So background on me, in the landscape industry for about 8 years now. I wasn't originally in a finance role. I was in a sales role for about 10 years, went back to school in my late 20s to get my bachelor's in accounting.
Yeah.
Ended up getting hired on as a accounting manager at a landscape company and we ended up scaling, growing, and doing really, really well to the point where, I had a couple people on staff with me on the accounting and finance side, and we scaled that up, and I exited at a time that was good for me. Since then, just been working in that fractional financial leadership role, I like to call it, more so than, like CFO or like putting a label on it, just because financial leadership to me, the impact that it's going to have on the business is much more about relating the numbers to the actual drivers in your business than it is about, trying to take the drivers in your business and turn them into numbers, right? Numbers are data. Data can get put to work for the business. And if you put it to work in the right way and you can have it organized in the right way, it can be very, very valuable and just be able to guide the business through. And it's a good, measuring stick. If you're hitting your goals and you can keep them very, very, data can be very, very meaningful to a business in that sense. Numbers
being data, like that's a really good phrase there. And it's something that I think early on in business, people don't really understand that. They numbers scare them, right? They just think how do I guess? How do I forecast? How do I figure these things out? How do I know how much money I'm making? Thinking back to early stages in business. And it doesn't even have to be that early. There's people that have probably been doing it for 15, 20 years that don't know how much money they're actually making or losing on that front. But the more that I've gotten, tried to get around some coaches and grow my numbers knowledge is it's literally just math at the end of the day. It is just 100%. Addition and subtraction. That is all that it is. And so...
And hopefully multiplication at some point.
Exactly, yeah. You do get to multiply at some point. But you got to get the addition and subtraction figured out first.
That's right.
But... it's literally like everything in your business can be like dumbed down, essentially dumbed down into a number.
Yeah,
100%. That's what it can be broken down into, and you can take a number, and that's how you get it's how you stop guessing, right?
Yes.
Numbers are freedom from guessing. And when you start managing those and measuring them, I think that's one of the big things. So I want to continue this, right? Before we go to this, let's talk LeanScaper. So you hear all these people in the background, right? There's people rolling in. What are you doing? What's your role here at LeanScaper now? Because you are an advisor here.
Correct.
What are you helping people do inside the community?
Yeah, I'm just helping them with clarity when it comes to their finances.
Yeah.
And it really, I feel like 95% of my job, and even with my LeanScaper clients, is to just translate for them.
Yeah.
What are your numbers telling you? And just get that financial literacy up to a point where they understand it holistically within the organization, and then give them some insight on what drives their business, what's going to move the needle for them in the coming year. I always need to start with, we need a plan.
Yeah.
Like, where are we trying to go, right? And then we can make those steps in between where they are now and where they want to go, right?
Yep.
And translate that back to the numbers so it can give them that measuring stick along the way.
Yeah. And you are essentially like you are connecting with LeanScaper community members, accelerator program members, that you're a resource for them, right?
Correct.
To get connected to learn the numbers. So that's, if you are in the community in the accelerator program, there are other people like yourselves in other different roles, coaches and things that can come together and help you grow.
A lot of great people.
So I want to transition over a little bit here, and this is where I think we're going to spend a lot of our time today, kind of the meat and potatoes, is I want to walk through almost like a customer journey with you. When you think about first starting working with a landscape business owner, what's a couple of the few things, what's usually going on in their business financially? Like, when you come in, what is the state of that on an average, right? What's the state of their financial status most of the time?
Yeah, the state, I think the easiest word to sum it up would be chaos. It's pretty standard.
Yeah.
In looking at their books, their chart of accounts, the way that they track their finances, the timing aspect. And the first thing I try to do when I come in is give some structure to it.
Yeah.
So I usually try to preserve chart of accounts, but I like to add summary groupings. So like we know, like especially with overhead accounts, how do we summarize this up so if we look at a P&L and collapse it all the way down, that we know where the money's going, right? And so like I have these very large summary groupings like administrative expense, right? Or advertising and marketing, professional services, things like that, where we know these big summary groups and where the money goes. That gives me a really good idea where they're spending.
Yeah.
And if they're overspending, right?
Beautiful transition into my next question there. Like, so an owner says, I have money coming in, right? I know money's coming in, but I don't know where it's going.
Yep.
Is that's kind of part of the process there that you're working towards figuring out?
Right. Yeah. Well, and that's the second aspect is timing. So I like to explain it in, I want to get things into the what buckets and the when buckets.
Yeah.
So the what buckets is a chart of accounts like I was talking about, and the when buckets is when it's hitting, right? When it's going to hit your P&L.
Yeah.
So we need both of those pieces from an accuracy standpoint to be able to get a good picture of where they're at.
Yeah.
And you can't define where you're going to go if you don't know where you're at, right? You need a starting point. I always talk about it as like if you're putting it in the GPS on your phone, it asks you for the destination, but it also needs to know where you're at right now to be able to give you the steps to get there, right?
Yeah.
And you need both pieces to be able to formulate that plan, right, to get that roadmap. And so that's the first piece I always work on is like, let's get a really clear picture where you're at right now before we look at the future.
Yeah, you got to figure it out now. I'm going to ask you a question I want to answer at the end, but I want to give you some time to think on it.
Okay.
You may know it like, boom, and if you know it like that, you can go ahead and answer it.
All
but
right.
What is, when you think about landscape companies, landscape business owners, what is one metric that you would say they need to know, like, they could be passed out, like they need to know it cold. Like this is the metric that they need to know at all times, at any time.
Okay.
Think on that. We'll come back to that at the end
for sure.
But I want to know, like, and guys, through this episode, like, think on that yourselves as well. Like, what do you think that is for you, and see if it aligns with what Brady's going to share with us today. But this is a big one. We can probably spend the rest of the show here. Cash flow. I know you see a lot of cash flow issues in landscaping.
Yes.
What
100%.
do you see? What is the common root? Like, what is the cause of cash flow issues that you've seen over your time in the industry?
Yeah. I would say first and foremost, it's going to be that point in time. You never know exactly where you're at, and a lot of that is going to be timing.
Yeah.
Even if you don't know where the money's going, like having an up-to-date picture, other than logging into your online bank account, right, of how much cash do we have on hand right now?
Yeah.
And that's cash flow forecasting is just like with business planning is like we need to know exactly where we're at right now, not just what the bank account says.
Yeah.
But like we need the company file that your accounting software that can tell you, what's in transit, what's going to be coming in and out, right? So if you run payroll and it's due on Wednesday and your employees get paid on Friday, well, it's not just Friday cash out for the direct deposits, and the 2 weeks later you have federal and state income tax that needs to get submitted and all these other payroll related expenses that hit, and you don't know that from looking at the number when you log into your banking portal. Like that's in your accounting software, and they can tell you how much cash is coming out in the future, right? So getting those processes in place, that structure to be able to get things up to date, real time, and also be looking into the future, that's the first step.
Yeah. That's amazing. But I think I would secondary question to that is so how do we do that? How do people, because I would say there's no way the majority, in my mind, there's no way the majority actually have cash flow projections.
Yeah.
There's no way.
It's tough.
There's no way. So how do we get to that point? What are steps that we need to be putting in place to get to that point of where we are building true cash flow projections? And this is a personal, teach me too, because we're a young company and trying to just figure things out and, get pricing dialed and budgets and everything like that. What does that look like? What do cash flow projections actually look like?
Yeah, for sure. So the basis of that of starting off, getting things accurate and up to date in real time, there's a lot of technology out there right now that helps you with. So it's something simple. A lot of users or a lot of people listening are probably using QBO.
Yeah.
Bank feeds, right? Being able to hook up bank feeds gets those transactions coming in real time. And there's a second piece of that people don't realize. They treat it as hey, now it'll automatically categorize my transactions with rules and stuff. But I like to recommend it to clients to being it needs to match, right? So somebody else is entering in the transactions because, like we said, there's stuff going in the future before it hits the bank account. And so when those transactions do hit the bank account, if it's correct, then they match. If it doesn't match to anything, that means somebody missed a transaction, right? Yeah. So that helps plug all the leaks in your process as far as transaction entry. And then the back end of that too is bank reconciliations become 10 seconds. Yeah. If you match all your transactions, the bank rec is done, right? And so that's the first step. Getting that hammered down is the process of getting transactions in and making sure they're accurate in a timely manner can really help with cash flow forecast. It's a standard. It's a baseline. It needs to be there before we can do any cash flow forecast.
Okay. Yeah. So that's first step in the process.
Yes, 100%. Yeah. So the action item, what you can do today to help get to that point is going to be making sure that you have some type of process, whether it's bank feeds through QBO or some other software that you're utilizing to make sure that we know exactly what transactions are coming through. Yeah. And then also making sure that the day-to-day bookkeeping has a solid workflow that transactions are getting in as soon as possible and making sure that they're accurate.
So, I don't want to. I don't think you're not classified as a bookkeeper by any stretch.
No.
So I don't want to. I don't want to use your time for that. But I do want to just a little bit while we're here. What is a bookkeeping process, or you say that day-to-day? That's literally what you just referenced. Yeah. For a larger company, right? Think we have somebody doing, and largest relative, say we have somebody doing $3 to $5 million, right? So you've got a couple office staff at that point, most likely.
Right.
What does that process actually look like? Can you explain that or explain just this whole financial process for someone who is sub $1 million, right?
Sure.
Because I think that's where a lot of the disconnect is. It's when you get to that 2, 3, 4, 5 million, that is just integrated as a part of your business, and you hire people for that, right?
Yep.
You can't do that sub $1 million.
Right.
You can contract it out. You can have it done, right? But you cannot bring somebody in your internal team, at a real physical location to do that. So, what are the processes that people need to be doing? So, you said, first one here was make sure there's reconciliations are matching. Make sure those transactions are matching, right?
Yep.
Which we do inside of our QuickBooks now with my VA. But what are other things that you think landscape business owners that are, again, sub $1 million that are struggling, because they're the ones that struggle so much, and they're the majority.
Yeah.
Like, they're the majority.
Mm-hmm.
And they just can't, because, again, they're not numbers gurus, right? They know how to cut grass. They know how to put hardscapes in, right?
100%.
So what can they be doing to bring some of that $2, $3, $4, $5 million range down to their level?
Right. I would say two things. Number one, try to simplify the process. Make it as streamlined as possible so it doesn't sit in the back of your mind as like this nagging chore that needs to be done, and just make it so it can flow, right? The second thing is to just make sure you stay on top of it, because every day that goes by, that especially for like $1 million company, make sure that you slot time daily to just take care of the bookkeeping.
Because if you do it daily, you're doing what, 10 to 30 transactions?
Yeah, you're doing 5. Yeah, I mean 30
30's a lot.
Yeah, 30 would be a ton for
a
$1 million company. So like every day, if you do it every day, it's not a burden.
10 to 15.
Right? If you do it once a
range.
week, it's a bigger burden. If you do it once a month, it's a massive burden. If you do it once a quarter, it seems like you can't do it. Right? Yeah. So just keeping up on it daily and just rolling, and then reaching out for help, right? You know, like not just me, but like even a bookkeeping firm is going to be able to help you. Outsourcing is great for that kind of stuff for $1 million company. It can be very affordable because most bookkeeping firms will price based on transaction volume. And so
it grows with as the company
yes,
grows.
It'll scale with the company, and the bookkeeping firm will be happy to take care of you for $200 a month or whatever. And you know that the baseline will be straight. Just making sure that those workflows are there. That's the other advice that I would give to like $1 million company looking to scale to 5, is get those processes in place as soon as possible. Make sure that they're there when you hire that first internal staff that's going to start taking care of it for you. Set them up for success. Set your company up for success.
Putting you on the spot again, could you, because systems and processes is the hot phrase in the last 12 months, 14 months, right? What is, give me like a 3 to 5 step example of a process. Like I mean like literally, like, can you walk us through like what a process would be for this? Tangibly.
And
it's on the spot. Because I want people again, we're talking to sub $1 million business owners that they don't know. Like they genuinely don't. And that's what I go back to all the time. What you don't know is what's killing you. That is what's holding you back, right? It's very simple. They don't know what they need to do in this process. So you can tell them, have the process in place. What is the process?
Yes. 100%.
So
no, that's good. That's good.
Like, so dumb it down to literally like.
Let's talk it. So I'll just like preface like with this example. We'll just say this is like a simple accounts payable entry. So you bought something and it's on credit and you owe that vendor. Okay. So that's the process we'll walk through.
Okay.
From an oversight standpoint, so like there's two different things. There's the like actual transaction that you're entering, but there's also the like, I don't know, the ethos of like why behind why you need to get it in this way, right? So when you're looking at the why, it goes back to the what and when buckets. It's like, when did that cash go out, or when did you purchase it, right? Making sure that date is correct, the invoice date, right? And the what, making sure it gets classed properly, right? So if we bought, we put in an order at Site 1. Okay. And we bought a pallet of fertilizer. Okay. Where does that go, right? Making sure that we know where that goes. So that in most businesses would be an inventory purchase, right? So it hits an inventory account. Making sure that gets in that day, right? The day that we receive the invoice for it is very important. I'm not going to. We don't have enough time, I don't think, to dive into the job costing detail of like how that gets allocated. So we'll just say it goes to inventory.
They'll come talk to you after.
to
go into that, right?
100%. So like the process would be, we receive the vendor bill. We open up our, I'll just use QBO as an example because it's the most popular accounting software. So open up QBO, we search for the vendor, we enter in the bill, making sure that the category is going to inventory, right? And then we save it. And then, that's there. And then if you run a balance sheet report, that puts your AP up. And if you pay that bill, it's cash out, and you're paying that vendor, so your liability goes down.
Yeah.
And it's there. But it's just like that part of the workflow, like it sounds simple, and I'm sure a lot of people listening are like, duh.
Yeah.
Right? But
I think more people would be confused than you think, though.
No,
I think that's why.
I believe it.
Yeah. I think that's literally why people end up the way they do.
Yeah.
Like,
well,
they don't
and we can
focus on
talk,
it.
you and me, about like, hey, we know if we buy something from Site One, then we have to pay them at some point.
Yep.
Right? So like in common terms, like everybody understands that. I'm sure everybody listening to the podcast knows that if you buy something from somebody, you have to pay them at a later date, right? This is looking at it from the accounting perspective, right? And it is that simple as long as you have the process in place, the workflow set up so it can flow through.
Yeah.
Right? So things are a lot less complicated than they would seem, especially on the bookkeeping side. Like, you can translate everything that you do in bookkeeping to somebody that has never done bookkeeping before, right? Like, you can always translate it back to the operations of the business, because the business is the one spending and making the money, right? So you already know what's happening. You just don't know. You can't look at the summary because it's not getting into your QuickBooks.
Yep. And that's so, folks, like, I don't want to just get stuck in the bookkeeping talk, right? Bookkeepers are very necessary. Okay, I'm not downplaying bookkeeping here. I'm not downplaying that. But what I'm saying is, like, I feel like bookkeeping is almost the foundation. Good bookkeeping is the foundation to good finance strategy on your part.
Yes.
Right.
And you asked me what does like the customer life cycle look like for my clients, and that is the first step I always go to, is that, looking at their day-to-day functions of the business from a finance standpoint, rebuilding the chart of accounts, setting up some accounting workflows to get things in there in real time, is because I need that as a basis. Yeah. We need to know where you're at before we can look in the future.
How much easier is it for you when somebody comes to you and they're like, help me, and they have like a knockdown, just spot on bookkeeping firm already taking care of things?
It's never happened.
Never happened?
Yeah.
Really?
I've in my experience, bookkeeping firms are actually a lot better than accounting firms. Just anecdotally, because accounting firms are going to set up a chart of accounts to feed it into tax buckets.
Yeah, they're not there.
They're not looking at it operationally at all. So that and it's usually a little bit harder to change the mind of somebody's CPA than it is to talk to a bookkeeping firm. Just be like, oh, hey, we're gonna just summarize this a little bit differently. Yep. Bookkeepers are like, hey, we're just gonna get the data in. If you can help make that more streamlined, we're all for it.
You're for it, yeah.
Where the CPAs are like, oh, well, it's gonna make it harder for me to look at this, and we need this for this. And I'm like, no, we can figure that all out. We need to get some insights for the business.
Yeah.
Because
it's going to give you better reporting for them, right? Yeah, like
100. Well, the thing the CPAs don't like is like the things that move the needle for your business are not the same things. Like tax planning is a very narrow scope in the finance world, but to them it's their bread and butter. Yeah. Right. So if they're given the keys to a system and they're getting paid monthly to track these things, they're going to set it up what's best for them to do their job,
which is kind of understandable.
100%. I don't blame it at all. It's just it doesn't provide the insight needed to.
Doesn't mean it's always what's best for the business.
To make better business decisions, not just maximize
tax planning,
tax efficiency. Yeah.
Transition over here to this fractional CFO, fractional financial leader that you called it. What are we talking about? So let's say we get the bookkeeping figured out, right?
Yep.
We get a good bookkeeper in place. We have processes. We're rocking and rolling. We're hitting $1 million, $1.5 million in revenue. We'll call it even 800,000, right? 800 to 1.5. Mm-hmm. What is that sweet spot? What are the signs? What are the symptoms, maybe, that you should start looking into this financial leadership position, like with you? Yeah.
If you start talking about the future and where you want to go, but you have no idea what the math looks like, how to get there, right? If you have a good vision in your head of like, hey, this is where we want to be in 3 to 5 years, but you can't put it on paper. Yeah. You can't show anybody else without words. That's a good time to start thinking about how to document that.
Yeah, that's good. What does that look like? Putting on paper without words, like give me an explanation of what you're putting on that paper.
So if they're like, well, we want to be $5 million in 5 years. Yep. Okay. And it's like, what does that path look like in between? Yep. So we have a bunch of things we need to figure out, right? Not just from a finance standpoint, also just operationally. Like we need more staff. Yeah. We need more trucks. We need all this stuff, but all of it costs money, right?
100%. Yeah.
And all of it the purpose of all of it is to make money. So it's like money is involved. We need to make sure that we have a money plan, right? So getting the projections out there of like, and you can look at it either way. It's like if you want to talk about how many staff you need at $3 million, we can do the math based on your current outputs, right? If you say...
This is what I was talking about earlier, like the numbers. It's literally all just numbers.
Yeah. Yeah, and also if you're like, well, what if I add 2 more crews?
Yeah.
What revenue am I going to be at there? We can do that math too. And then eventually, once we get everything straightened out, we know exactly what your output is now, then the multiplication comes, and it's like, okay, well, we take that and we scale it this way, right? Then this is what, not just the revenue, but this is the cost of goods that goes along with that. This is the overhead support that's needed for that. And then we can document that plan, the dollars and cents of it, right?
Yeah. And then you also break down, like, for me, the way that my brain goes here is, like, because this is recent for me, is figuring these numbers out, is, like, dumbing it down. Because, again, I'm a very simple, like, hey, dumb it down to what do we need to be doing per week, like, type thing, right?
Right.
We literally have a spreadsheet over the next 12 months of, like, the number of estimates we have to send, the revenue and estimates we have to send, our close percentage, what we need to be, what we need to sell every week. Like, you know, that's all done. And it's very easy to just look at it and be like, okay, like, we got to sell $75,000 a week, you know, or whatever that number is. And it's just easy to track. Like but I feel like so many people get caught up in like, I want to hit $1 million, but we're just going to figure it out. We're going to get there somehow.
Yeah,
you know,
exactly.
Like, that's literally where everybody was at.
Yeah. You're just taking shots in the dark, right? Or you're just growing for growth's sake. That's one of the things that I see a lot is like if they've experienced a lot of growth, and I have clients right now that, you know, they boomed from 5 million to 10 million and didn't really have a plan. It was just the market needed it, and so they just kept on adding crews and growing. But they never had a plan. They got here and they're at 10 million. They're like, we have no idea
anything
where we're going or like what we're doing. Like what
we're just
what's
here.
The purpose here?
Yeah.
What's the why behind it, right? And so that's what needs to be defined at any stage of growth, right? We need to have that guiding light, so then we can stack things up at all the steps. Like you said, the way your brain works, you need that weekly. It's much easier if you're like, we need, you know, 100K in estimates a week because our close rate is 60%, so we need to close 60K a week. If you send out 75K in estimates one week, you know that you got to send out 125 the next to catch up, right?
And it leaves no room for excuses.
Right, 100%.
Like there's really no reason to lose.
Well, it defines the boots on the ground goals, those daily, weekly, monthly goals. It's like, this is what we grind for. Yeah. And we know that if we keep on checking this box throughout the year, we're going to get to where we want to go. Yeah. And that's where the real impact comes in. I mean, the first aha moment is like when we get that plan documented, like I was talking about. But then when we start chopping it up, so when we go 5 years down the road to, hey, what does it look like halfway point, right? Yeah. And then what does it look like over the next 12 months? Yeah. Right? And if we can get that well defined and we can get everybody in the company to have at least one number they're looking at. Yes. And you share with your team. I could go on a whole nother podcast about goals and metrics and how if you're holding somebody accountable for something, you need to empower them to own it. Yep. And ownership to me is that empowerment piece and the accountability piece, right? So you need to move the needle in this specific area. Yeah. They need to have control over it. If they don't have control over it, you're setting them up for failure, right? Because they could do everything in their power and still not hit that goal. That means it's not a good goal for that employee, right? So it's like they need to be able to move the needle for it, and making sure that everybody moving the needle on their individual metrics is rolling up to move the company in the right direction. Yep. Right? So that's like the structure side of it. The architecture side of it is like looking at it from 30,000 feet. We need to know that all of those add up to the company getting to those goals that we've already defined. People are doing things individually that aren't coming together. You're never going to see the whole thing, the whole machine move. Yeah. I mean, just the natural tension. Like if you talk about from like a generalized perspective, sales and ops, right? So salesmen want to get as many sales as possible, and ops is trying to get stuff in the ground, right? Once we start talking about efficiency and stuff, like if estimated hours and actual hours aren't lining up, there's two different pieces to that, and they are naturally going to have some friction, right? Because salesperson's trying to get more sales, more closes, so they want the price on the customer side to be as competitive as possible, right? And then ops is going to want to have as much of a cushion as possible so they can do quality work, right? And so there's that natural tension there, which there's a certain amount that's healthy, right? But it's like making sure that they're all working toward the
together,
same common goal, right? And so, like,
ops is not pissed at sales because they gave
100%.
Yeah.
And I mean, you always look at what is the metric that every salesperson has. It's revenue, right?
Yeah.
It's like how much sold work are you getting out there?
Yeah.
When really we should be looking at the profitability of those, or at least putting like a revenue per hour benchmark along with that sales goal to make sure that there's no estimate that goes out under this threshold, because we know if that revenue per hour threshold is there, then it's going to be profitable if ops can hit the hours, right? Because hours are going to be the most variable thing on any bid, maintenance or install.
Which is why you need production rates.
Right, 100%.
Yeah, you need production rates bad. So before we wrap this thing up here, I don't want to hold you too long. You natural transition earlier. You were talking about the company that goes from 5 to 10 million, right? And they scale pretty quickly. These companies that go from 500 to 2.5 to 3, right? We'll say that jump. That's just more relatable to kind of where I'm at. I think a lot of our audience is. And so you make that jump over a 2 or 3 year span. What do you see, or what would you say, recommend that is probably the first financial system or process that you see that breaks over that period? Like what's the most common thing that breaks they don't have really dialed in?
Just the processes, like we were talking about the day-to-day, that bookkeeping or accounting processes, like getting the data into the system, and not just accounting data, like just I'll say generally like data accuracy and timeliness. Yeah. So whether it's LMN, Aspire, QBO, whatever software you're using, and whatever role it plays within your business, making sure that information is accurate, up to date, and has the context that you need. You know, like you need to be tracking things. They need to go into the system a certain way to be able to get the information that is actually a value add to your business, right? It can't just be like, hey, dollars and cents in and out, or like, oh, this generic one task, you know, is getting 80% of the hours, right? You know what I mean? Like you need a little bit more granular, and it's really hard to see that coming, right? A lot of companies will just rush right past that stage because it takes time to set up those processes, the workflows, the structure within the software to be able to properly run on that without having a bunch of hitches along the way. Yeah. And it's really hard once you get data into a system to reformat it in a way that you want. You can't collect information on a job that happened 6 months ago, right? You can't add information to that unless you have like physical paperwork to be able to go back in, and somebody's got to spend the time to go back in there and enter that information. So the best time
that you don't have.
Yeah. You know what they say is like the best time to plant a tree is 10 years ago. But the second best time is right now.
100%, man. That's really good. That is solid. I mean, I think this has covered a lot of financial issues that people run into, the hang-ups that we hit early on. If you had to speak to the landscape owner listening today that feels overwhelmed, right? Finances just scare them. They don't really know what they're doing. Maybe they're upside down. They lost money last year. What is like the first step that you would tell them to take from today, January the whatever it is, 20th of 2026?
Develop a plan, even if that is one phrase. Develop a plan for where you want to go, like the real why behind what you're doing right now and where you want to go, and try to define that as well as you can. And if you can't translate, like I said, if you can't document that without words, if you can't translate that into your numbers, ask somebody for some help.
But you got to find that plan first.
You need to have a why,
even if it is with words.
Yes, 100%. I can construct this beautiful financial plan for somebody for the next 5 years. But it's my plan. I need that guiding, like I said, the GPS. We need the destination.
This is where I'm going.
And the current location. So
that's fantastic. What did you think any more about my question earlier on?
100%. And I hinted at it a little bit a couple minutes ago. To me, and this is more recently that I've latched onto this because it has so much depth to it. Like I could probably talk for hours on it. Revenue per hour is very simple to track. And it relates back to the two things that most landscape companies can track accurately and timely. So it's taking revenue, cash in. So
$1,000.
Everybody is going to be really tuned into that. And hours, because payroll, right? So payroll is usually the one thing that's accurate in any of the businesses that I work with. And so we have revenue, so it's the most accurate thing, even not looking at somebody's books, right?
Yeah.
I know I can rely on it externally, and they can rely on it internally. And so revenue per hour is just a very good baseline metric for any company. It's very easy to calculate. The one caveat that I would put to that is revenue per hour is important, but you need to know what your revenue per hour benchmark is to be able to be profitable. And that takes a little bit more work.
Yeah, that's right. But you got to start through these beginning processes, right, to get to that point.
Yes.
Software like Element is what's going to help you get there, right? You have that budgeting and estimating tool in there to build your budget, put that out there on an estimate. It has changed our business 100%. Like any estimate that goes out now, like before we hit send, we look at the analysis and what is that RPH going to be, right? And we usually hover. I would say our average is probably 145, 150 right now is what it sits at. So it goes up and down. It fluctuates a little bit, but usually
based on revenue
there.
mix, you know, obviously anything with materials or subcontractors the revenue per hour is going to be higher than with something that's just straight labor.
Yeah.
So, but finding those benchmarks within your business, which within each service line, really is going to make a world of difference. Both with the long-term planning, because I can use that as a driver if I'm talking about forecasting.
Yeah.
Right? But also the day-to-day benchmark of hey, we said we need to be at 150 an hour. This is what we did last week. This is the revenue we produced, and these were the hours.
Yeah.
Right? Take the revenue divided by the hours. We have our revenue per hour.
Yep.
It's just a very simple calculation that can be done by any company.
What you need to do, so you hit on it, revenue divided by hours, right? So you need to get that first step of what is your revenue divided by your estimated hours, right? And then you got job costs it down to say, this is our revenue. This is what we actually built. This is what we actually spent on the project. So our revenue per hour was not truly 150. It ended up being 110. You know, we estimated at 150, but we went over.
Yeah, 100%. And that's where there's a lot of depth to revenue per hour and a lot of things you can attach onto it. There are real drivers in the business. At the end of the day, actual profitability, not estimated profitability.
Yeah, exactly.
Actual profitability is what is going to matter.
But that's what people don't do. That's like the second step in the process. 100%. Like they don't ever job cost anything.
Right, exactly. And that's where it's how can we get that to there as efficient as possible? And that's probably for another episode.
But we talk job costing all the time. Like that is. Yeah. But real time. Like we're on a project at home right now. We estimated it at. I literally will pull it up real time. This is how quick Element can do something too, by the way. I will tell you real time what we estimated it at revenue per hour. Actually, I don't know that I can tell you. I don't know that I can tell you revenue per hour estimate, but I can tell you the man hours. It was. We had 40 hours on it. We're sitting at 30 right now. So, and we will not hit it. We probably won't.
75% complete.
Yeah, we're not 75% complete. So we will not get there. We'll be slightly over. But I'm literally sitting here, 40 hours estimated, 28 hours, 57 minutes actual quantity, all your numbers out of that. And so, but you can break this down and go into analytics all in Element. Like it's really, that's how beneficial it is. So
analytics Element has a very good data set. Like it structures your data in a way that people like me can use it immensely.
Oh, yeah, that's 100%. The coach that I work with, Pat Murray, literally just walked by. We go in analytics every time we're on a call. We're like, all right, let's dive into the last 2 weeks. You know, what did it look like? So, well, Brady, I appreciate your time today, buddy. I know we went over.
Fun.
What is the best way for people to contact you, inside or outside of LeanScaper? What does that look like to work with you, and when do you think it's a good fit for you to work with somebody? Yeah,
just you can look me up on LinkedIn or I think I have a link at my website that I haven't touched in 2 years. But, B Advisory is the name of my business. Brady Crabtree is my name. You can look me up on LinkedIn, hit me up.
Who is your ICP in LeanScaper talk? Yeah,
so my ICP is usually in that, I would say $5+ million range. They already have solid accounting processes. I can come right in. If we don't have to do a rebuild, I can come in right away. And make a big impact. Yeah. That would be my ICP.
That's bold. I like it. Like staying strong in that, from your business front. But that's not to say that you can't be helped by Brady as well. I think you are a resource to help someone get you connected with somebody who would maybe have better help in that stage of business.
I truly feel like I could help anybody that's listening to this podcast right now, and I can also learn. I learn something every new engagement I take on.
Yeah.
And that's the beauty of it for me, is that I can experience that growth while providing some impact on the business side.
Fantastic, man. Well, excited for this week ahead. We got a big week. Lots going on, lots to do. So I'm excited, happy to be here. You here the whole week?
Yes.
Or through
Yes,
Thursday? So
Yep.
fantastic. Well, guys, this is Q1 intensive here in Arizona with LeanScaper. They're going to have another one in March, and then there's 2 more after that. I don't know what the dates are. But Cape Coral, guys, thank you to the LeanScaper team for setting this up. This has been really cool watching everybody come in the morning for breakfast and day one. People are excited. The energy's here. Like, this is the second event with in a row with 800-plus people. Something is working. And so accelerator program, if you want to get in there, guys, now's the time. Like, it's early January. You've only missed 2 calls. Like, reach out, get in the program. It's very nominal to get started. Like, we were we are a paid part of the program in 2025 and continuing to go into 2026. Like, it's going to change our business, the way that we operate, bringing those systems in. So any final thoughts that you want to leave us with today? You think we covered most of everything?
I think we're good.
Yeah.
If you let me talk anymore, we're on for another
we'll
half
go for another hour. So
hour.
I love it, man. Well, thank you for tuning in, guys. Thank you for supporting us here on the Growing Green Podcast. Thank you to Brady for coming on.
Thanks for having me.
When this is out, go give Brady a follow and say you heard him here, and thank him for his time. So thank you for tuning in, guys. Without any further ado, I'm going to wrap this one up, and we'll catch you here on the next one.
Thanks for tuning in to the Growing Green Podcast. It is an honor to have you listening, and we hope you receive valuable advice to help take your business to the next level. Don't forget to follow the podcast so you'll be notified when our next episode drops.